Hello, everyone. Thank you for joining us today and welcome to this educational presentation. Now, I would venture to say that most of us have tried some brand new trading strategy or technique that promises the world that's supposed to make us tons of money, or we're going to retire in just a matter of months if we use it and just simply take the signals. And after a couple of trades, we realize that it doesn't work at all, right? I mean, we've all been there and we feel that we've just been sold a bill of goods and it doesn't really work at all. Well, today, I'm actually going to introduce you a trading technique that really works. In fact, I use this all the time. It's a great method that you can actually apply to any market, any time frame, and any direction. So it makes no difference what market or direction or time frame you trade. For example, if you take a look here at this older chart of Costco, someone can easily say, okay, we're in an uptrend, right? We're going higher. But let's say you are a student of candlestick patterns. And right here, you have a very strong reversal pattern called the evening star pattern. So this would most likely tell you that we're going to be headed in a downward direction. We're making a reversal pattern right now. So most likely you should sell. So let's say you went out and sold, maybe you bought the puts or you actually sold your long position. And you say to yourself, okay, we're going to come all the way back down here, according to some guy on TV or the pattern you're trading. Well, the next day, you feel very good about yourself because it has gone down, not a lot, but just a little, and you feel good that it's going in your right direction. But with the actual technique that I'm going to be sharing with you today, you would have not have been selling at all. In fact, this would have actually been the second day here down, would have been a buy signal using this technique. And if you had actually learned this earlier, you would have known that there was an earlier buy signal a week ahead of that buy signal. So altogether, had you had taken the first one, you could have potentially captured upwards of 35 points. So this is what we mean when we say that this is a technique, a trading technique that really works. And everything you'll be seeing today is displayed on our platform, the PTS Primo Charting platform that actually teaches you how to trade. So welcome to this educational presentation. Once again, my name is Stephen Primo. I am the president and founder of Specialist Trading. I've been trading now for 48 years. I started my career on the floor of the Pacific Stock Exchange, where I was a specialist for roughly 9 years. A specialist is just simply someone who makes markets in roughly about 50 or 60 stocks. So I made markets during the crash of 87 and the bull market that followed. And I always tell students that I've seen and traded just about every method, every strategy, every system, every technique you can think of. I've traded just about every market environment you can think of. So in my 48 years of trading, I know what works in terms of consistency, and I know what doesn't work. So that's why I formulated Specialist Trading. I teamed up with Proprietary Strategies roughly about 15 years ago, and we developed Specialist Trading with one goal in mind, and that was simply to educate traders. And you'll see that in today's educational presentation. Now, before we begin, we ask that you please take a moment to view our disclaimer. I'm going to show you a lot of performance results by applying this trading technique, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. And since we are an educational company, all examples are strictly for educational purposes only. And once again, as we always show you, you're invited to actually follow us either on Twitter or X, whoever you like to call it, or subscribe to us on YouTube. There's lots of ways to get free education, either by following us on X or by subscribing on YouTube. So please follow us both ways. Now, I'd like to begin today's educational presentation by starting out with something that my mentors taught me, because believe it or not, when I first started trading over 4 decades ago, I struggled tremendously. I couldn't make a dime. And I was lucky enough to have a few mentors on the floor of the exchange. These were specialists who had been trading roughly about 40 or 50 years themselves, who saw how much I was struggling and how disappointed I was. And they taught me a lot of the same things that I teach my students around the world. And I remember here's one of the first things they said. They said, Steve, the secret to consistency is simply to want what the market wants. It's that simple. In other words, if the market wants to go up, we're going to be a buyer. If the market wants to go down, we're going to be a seller. Unfortunately, we're always taught the opposite, right? We're taught, well, the market's gone up, but it's a little overbought. It's gone up too high, too quickly. So we should sell it, take a profit, or, go short. Or it's come down too strongly. This is a buying opportunity. Now's the time to buy because it's oversold. Or the market's in a range market. It's doing nothing. It doesn't know what it wants to do. It's simply going sideways, whipsaw, stay out of the market. All right, we're always taught that we're telling the market what it wants to do, but we've got to listen to the market and listen to what it wants to do. And then we just simply jump on board. For example, let's take a look at this chart here. Here's an older chart of Tesla. Now, obviously, it's been going down. Now, someone would say, well, yeah, Steve, it's easy to see what the market wants to do. It wants to go down, right? So let's say you sell it or you remain short or you're out of the market saying, I'm not going to do anything because it's in a downtrend. And then you miss the big up move entirely, right? So see, it's not just enough to look at a chart and say, well, I know what the market's doing. You need some more help because actually the market is like someone who speaks a different language. Have you ever tried to talk or converse with someone who doesn't understand English and you don't understand their language? Maybe it's French or Spanish or something else. It's very difficult to communicate. It's the same way with trading the markets. The market really speaks a language in and of its own. It doesn't speak what we speak and vice versa. We're not taught to learn how to speak the language of the market. We're taught to, make it bend to our rules. So what we really need is some type of a translator, something that will translate what the market wants to do. So in order to be in sync, which is really what we're trying to do, we're just trying to be in sync with the market, we need a tool that translates what the market wants to do. And that tool is the PET-D. This was a tool I was first introduced to some 40 years ago on the floor of the exchange. And let me tell you about it because I talk about it often. I use this on a day-to-day basis. But for those of you who are new to my presentations, I see we have a lot of new faces today in today's class. So let me explain to you what exactly the PET-D is. It is a proprietary algorithm. And the reason why it's a proprietary algorithm is because it's too difficult to actually do and calculate it on your own. When I first learned this, I had to calculate this on a tick-by-tick basis nearly with a hand calculator, and it was almost too difficult to use during the day because it was just too cumbersome. Well, we've taken all of the hard work out of it for you, kept it in-house, and turned it into a color bar tool. So this is what makes it simple. We color the bars either green or red. And that's all you have to do is know how to apply it with the color bar tools. Now, one of the standard ways to apply it is as a signal confirmation tool. So this means any strategy you have, it could be one of mine, one of yours, it could be someone else's, it makes no difference, but you can use the PET-D to confirm whether you should take that signal or not. But we're going to use it in the most standard and most benchmark way of applying it. And today I'm going to share with you how to use it as an early trend detector, because that's really what it does. It tells you on a tick-by-tick basis what the market wants to do, what the trend is, way in advance of other tools that I've used. And remember, I've been trading for nearly 5 decades. I've used just about every tool you can think of, and the PET-D is the best tool I know for detecting the trend in advance. As we look back at the older chart of Tesla once again, remember, just looking at a chart or using conventional ways to determine the trend, we get in too late. In other words, we would have gotten out of this, and by the time it turns all the way around, we're probably not getting back in until right here. So here's the beauty of the PET-D. On our platform, we make it simple. There's nothing you have to calculate. All you have to do is go to the green strategy tab up here where it says PET-D, click it on, and the colors automatically change to either red or green. Now, a series of red bars, 3 to 5 red bars, automatically tells you that the trend, the short-term trend, is going lower. And as you see, you would have learned well in advance that the PET-D had identified a downtrend, and you could have taken advantage of all this move to the downside. Conversely, once we had 3 to 5 consecutive green bars, you would have been warned well in advance and alerted by the PET-D that an uptrend was about to take place. So as it says here in front of you, the beauty of the PET-D is that it tells you which direction you should be trading. And once you know that direction, you can apply virtually any technique that is in sync with that direction. So now that you know what the PET-D is, let's talk about the technique we're going to be teaching you today. This is the trading technique that uses the PET-D. Okay, for buy setups, here are the rules. You want to identify 2 consecutive green bars. 2 consecutive green bars must be generated, okay? So in other words, without the PET-D, you're seeing 2 bars like this. But once you apply it, you want to see 2 bars next to each other. Bar number 1 and bar number 2 are both colored green, okay? Now, green bar number 2 closes below the low of green bar number 1. All right, so going back to those bars, here's green bar number 2. We want to see the close below the low of bar number 1. So if this is the low of bar number 1, did we close below with green bar number 2? Yes, we did. We closed below bar number 1, the low of bar number 1. So therefore, that's a buy setup. That's it. It's as simple as that. There's no tons of indicators to have crossing averages. There's no overbought, oversold. We're just simply looking at these 2 bars. And remember, these bars could be a 1-minute bar. They could be a monthly bar. It makes absolutely no difference. It could be crypto or it could be the dollar yen. It makes no difference because the PET-D doesn't know what it's translating. It's simply translating the data in front of it. Now, let's look for sell setups. They're simply the same thing. We just turn the rules upside down. We want to see 2 consecutive red bars that are generated right next to each other. So once again, without the PET-D, we have a couple of bars next to each other. Once we apply the PET-D, we see here that they're both red. Bar number 1, bar number 2. Now, red bar number 2 must close above the high of red bar number 1. Okay, so here's red bar number 2, outlined red. And here's the high of red bar number 1, okay? Did it close above the high of bar number 1? Yes, it did. Close is above bar number 1. So therefore, what is the market telling you? What is the PET-D translating? It's saying that's a sell setup because there's a high probability that this is going lower. Okay, so now that you know the simple technique, let's share with you some more examples. And remember, everything you're seeing today is displayed coming from our platform. Everything is 1 click away. This is the educational platform that actually teaches you how to trade. Once again, we are first and foremost an educational company. We are not a signal service. I don't have a chat room at my site. I don't have any trading rooms because that would be a disservice to you. The whole industry is based on you going somewhere or watching TV or listening to someone or waiting for the earnings to come out so you can decide what to do. That's not the correct way to trade, in our opinion. We teach traders all of these things that have high levels of consistency so that you can make your own trading decisions. You should never take your trading instructions from someone else. You should be taught what to look for, but then once you know, you are in charge of your trading. Not me, not some guy on TV, not someone in a chat room. This is how you become a consistent trader. The traders I know who have been trading not just a couple of years or even a couple of months, but the ones who have been trading for 2 or 3 or 4 decades are the ones that make their own trading decisions. They don't go to trading rooms. They don't go to chat rooms. They don't listen for the economic numbers to come out. They simply look and see what the market is telling them. This is what we're trying to instill in you today. All right, here's a chart of AMAT, applied materials, okay? We're going higher. But let's say, once again, you're like most people, you're in that chat room and they say, well, you know, this is overbought. So don't buy it now because this is actually a selling opportunity. All the indicators are overbought. So it looks like it's going to come down. So you stay away. And for the next 2 days, it looks like that guy in the chat room is right. But does the market really want to go down? Remember what my mentors taught me is you want to want what the market wants. So what's our translator telling us what the market wants? Well, we click on the PET-D on our platform right here, click it on. And what are the last 5 bar colors? They're all green. So even though we've gone down for the last 3 days, had down closes, the market is telling us it still wants to go up. It doesn't want to go lower. It wants to go higher. So this is a buying opportunity. This is not a selling opportunity. So let's look for those 2 green bars next to each other. Okay, here's 2, but no, it doesn't close lower. Here's 2, it doesn't close, no. But here we have 1, 2. Now, bar number 2 needs to close lower than the low of bar number 1. All right, here's a low of bar number 1. Did we close below that? Yes, we did. So that's a buy signal. So everyone else was telling you that this is coming much lower, it's too overbought. You're buying because you're listening to the market. You're not listening to someone on TV. You're not listening to the earnings. You're listening to what the market is telling you. The market's telling you it wants to go higher. And what do you know? 30 points in the next few days here to the upside that you could have potentially taken advantage of. See, this is how simple trading can be when you want what the market wants. But you have to learn how to listen to it. And that's why the PET D is so important, because it actually translates what the market wants to do. All right, let's look at another chart here in CTAS. All right, Cintas. All right, this was going sideways, and then we had a real large drop down here. So now, all right, it looks like a market wants to obviously go lower, but then the following week, it kind of firms up. And maybe that guy on TV after the market closes says, hey, this is major support here. Or maybe you bought that $10,000 program that follows the institutions and the banks, and they're big buyers at this level, right? So you got to follow them, right? Because they're always right. They've got the big bucks. So you say to yourself, okay, that's the way I used to trade, but now I'm learning to listen to the market. So what's my translator say? Click on the PET D, and the last 1, 2, 3, 4, 5, 6 bars have been colored red. So the market is telling you, no, until I have consecutive green bars, I want to go lower. Even though it looks like I'm firming up, and even though the last 5 bars have closed up on the day, I want to go lower. So now you learn what the market really wants to do. Let's look for that 2-bar pattern. We want to find 2 consecutive red bars where bar number 2 closes above bar number 1. Is there any example right here? Actually, there is. Bar number 1, bar number 2. Here's the high of bar number 1. Did we close above it? Yes, we just barely did. So that's our day to sell. So we sold, and we're actually short here now. Nothing much has happened these past 3 days. And then look what happened. It fell out of bed 30 points. Now, obviously, some news came out where it just gapped down and went down much lower, right? Excuse me. This was just about a month ago. But isn't it funny how we were short days in advance of that big market down move? Why? Because we had our translator telling us what it wanted to do. Here's an example in EA. Okay, we're going much lower. Now, let's say, once again, you are a candlestick trader and you say, hey, Steve, I can't go against the candlesticks. This is a bullish engulfing pattern. It's a major reversal pattern, and it usually picks the bottoms or the tops. So I've got to use this. The bullish engulfing pattern, the tops are picked by the bearish engulfing pattern, but those are 2 of the strongest candlestick patterns you'll ever find. Okay? This is why a lot of students lose money, because they're out of sync with the market. Remember, we don't care what candlesticks, what earnings, what overbought and oversold indicators, or what institutions are saying. We only care what the market is saying. So let's use our translator. What's it saying? Click it on. Nope. It's saying that we're still going lower. We want to go lower. And we see that 2-bar pattern right there, the very low. How can you go short at the very low? I know it's difficult for some people, but that would have been the wise thing to do, to sell, because the stock fell coming in to just this week 30 points. And once again, it gapped down on some news or some event. Isn't it funny how we knew to be short weeks in advance? You can apply this to another market. Here's a 4-hour chart of the euro yen. Okay. Now, looking at this, someone could say, well, yeah, we've gone up, but it looks like we're rolling over. So, Steve, I don't need the PET D to tell me. It looks like we're heading lower. Okay. I'm listening to the market, and it says it's going lower. Okay. Well, how well did that work? Because it shot up right after that. So, looking back in hindsight, how could this technique have helped us? Well, we apply the PET D, and we see that the entire time the bars were all green. Even though we had a strong down move here, followed by another down move, it doesn't matter. The PET D was saying these are buying opportunities. These are not selling opportunities. So we look for that 2-bar pattern, and what do you know? It's right here. Bar number 1, the low of bar number 1, and here's the close of bar number 2, lower. So we would have bought right here, and 195 pips in just a day or two. That's close to $2,000 per unit if you're trading the euro yen. Potentially, you could have captured. Here's an example in CEG, all right? Someone looking at this would say, well, Steve, how is it possible to know what the market wants to do? It's going up, it's going down. The market really doesn't know what it wants to do. Well, not really true, because if you click on the PET D, the last 5 bars have been green. So the market does know what it wants to do. It wants to go higher. So remember, as my mentor said, the key to consistency is just to want what the market wants, not to fight it, not to try to pick up top or a bottom, but just to want what it wants to do. And so if it wants to go up, let's apply this technique I just taught you. Here's bar number 1, the low. We closed just below it with bar number 2. So you would have bought right here. This was just a couple of weeks ago, and potentially captured 65 points coming into just last week. And remember, this is not based off any news, not based off any falutin indicators or something that you have no idea what it's based off. This is based off just market behavior. All right, let's look at Adobe. It's going lower, obviously, so the market says it wants to go down. And then what do we have here? A reversal, right? We opened lower and closed higher. That's a major, major reversal pattern, technical analysis 101. And for the next 3 days, it looks like we're right. It's not going down anymore, and it looks like it's going higher. So we got to be a buyer, right? Conventional wisdom would tell us we should be a buyer. Well, what is the translator saying? Nope. Even though it looks and appears as if we had a reversal, and it appears as if we stopped going down and started to head higher, all of the bars from the beginning to the end are continuing to be red. So we look for that 2-bar pattern. What do we have right here? Here's the high of bar number 1. Bar number 2 just closes just barely above. So that's a sell right there. You could have sold, gone short, bought the puts, whatever you want to do in Adobe. And coming into a couple of weeks ago, 45 points to the downside. Okay. How about Apple? Now, all of our methods and techniques at Specialist Trading are extremely consistent. Now, I know a lot of students say, well, that means they're all winners, right? That's great. No, consistency means that you will have some losses from time to time. But a consistent method is one that's able to recoup those losses. This technique is extremely consistent, but that does not guarantee that every setup is going to be a winner. For example, we have a buy setup right here in Apple. This was just about a month ago. And had you taken advantage of it and bought it, you could have potentially captured 12 points. But let's say you didn't get out and take a profit. And let's say you stayed in, and ultimately it went the opposite direction. So let's say using one of our standard stops, which we teach you in the course, you would have, say, lost 3 to 5 points. Okay, let's say 5 points just to make it even in the worst case scenario. All right, so let's say you didn't take advantage of that 12-point swing, you didn't get out, you took a 5-point loss. Okay, well, this will happen every once in a while. But remember, a consistent method is one that's able to recoup those losses, oftentimes on the very next setup. A lot of traders, what they like to do is play the victim game, and they like to go sulk in the corner every time something doesn't work. They say, oh, this doesn't work. I always buy these things that are terrible, and they go sulk. But while you're doing that, you're missing another chance to make that back. For example, when this went lower, the bars turned red. So now the market's telling you it wants to go lower. So now that we're out, we have a 5-point loss. Guess what? We have another setup here. Here's bar number 1, bar number 2. We close above the high of bar number 1. So now get back in the race, get back up. And you could have gone short and potentially captured 28 points. So you've had more than enough room to make back that 5-point loss. And even if you didn't take that setup, guess what? There was another one generated just days later, and you could have made about 5 or 10 points there. So the market is always giving you these second, third chances. Don't go and behave like most traders where they go and sulk, or they say, oh, I want a refund, this doesn't work. You've got to get back on your horse, because a consistent method can often recoup those losses, often on the very next setup. All right, let's go to a different time frame, because it doesn't matter what market we showed you currency pair. It doesn't matter. We could apply this to a weekly chart. Let's say you're a swing trader and you look at this weekly chart of BIB, Biogen. All right, you say to yourself, well, Steve, I don't know, that guy I've been following for years, he said this is a major bottom right here. And you've got to buy, right? He's never wrong. Well, is it really a bottom? Let's go through the steps. We apply the PET D and say, well, listen, it may be a bottom, but the PET D is saying differently. It's saying it still wants to eventually go lower. So until we see a series of green bars, the market's telling us, it's translating through the PET D that it wants to go lower. So here we have bar number 1 and bar number 2. There's the high of bar number 1, followed by the close of bar number 2, which is just above it. So that is actually generating a sell signal. So even though you might be following some so-called guru that knows everything and says this is bottoming out, I would much more likely listen to what the market's telling me, because after all, isn't that the source of what I'm trading? Isn't that the source of what you're looking at all the time, the actual market? So why not take your instructions from that, as opposed to some guy in a chat room or even some guy in a webinar? Listen to what the market's telling you. And it's telling you it wants to go lower, and we just gave you a technique to sell. 65 points coming into this month. All right, what happened to the bottom? What happened to the major support there? Okay, now we know that a lot of people don't like to go short even on a weekly basis. That's fine. But let's say you were long Biogen. You could have used this technique to exit the market as well and saved yourself a 65-point loss. We can even go out to a higher time frame. Let's look at a monthly chart of Netflix, okay? Not much we can do here, not really giving us a lot of information, but we apply the PET-D and we see that, well, the market's telling us it actually wants to go higher on the short term. So I'm not going to sell this, or I'm not going to bypass this because it looks as if nothing's happening. I'm going to actually look for that 2-bar pattern. And as we look here, we see that we have bar number 1 and bar number 2. Okay, so we want to buy if bar number 2 closes below the low of bar number 1. Well, here's a low of bar number 1 right there. Did we close below it? Sure we did. So even though this is a monthly time frame, it makes no difference. The same rules apply. So that was telling you to buy this in September of 2023, about a year and a half ago. So you could have purchased Netflix or bought some options, whatever you wanted to do, put it in your long-term portfolio and potentially captured 620 points coming into this month. And even if you miss that one, remember, the market is always giving you more and more chances to get in. Lastly, let's look at a chart here, the Australian dollar. Now, in hindsight, it's easy to say, well, yeah, Steve, obviously this market wanted to go lower, the daily Australian dollar, but how could I have taken advantage of this? Well, we apply the same process. Apply the PET-D, and it's easy to see that we knew well in advance that we wanted to go lower. We knew well in advance way back here because we had a series of red bars. The translator was telling us back in November, the Australian dollar wants to go much lower. Okay, so we knew not to buy this and to only be a seller of this if we wanted to. Now we look for that 2-bar pattern, and guess what? We had multiple chances to sell because every time we closed above bar number 1, another one here, another one here, another one here, and still another one here just a couple of weeks ago, we could have potentially captured over 600 pips. That's over 6,000 potential dollars you could have captured per one trade here, per one unit, okay? All right, let's recap what we taught you today in today's educational presentation. Remember, buy setups. You want to identify 2 consecutive green bars that have been generated next to each other. Green bar number 2 must close below the low of green bar number 1. That will generate a buy setup. For sell setups, identify 2 consecutive red bars generated right next to each other. Red bar number 2 must close above the high of red bar number 1. It's that simple. But now, for the very first time, you're learning to listen to the market as opposed to fighting it and telling it what it's supposed to do. And you're making your own decision. You're not listening to some guy in a chat room, not listening to some guy on TV. You're not waiting for the earnings. You're making your own decision based off what the market, the source of what you're trading, is telling you. So ask yourself, 2025 has just begun. We're just in the 3rd week of the year, okay? Do you think this technique can help your trading for the remainder of the year? I think all of you are shaking your heads up and down saying definitely it could. So here's what we have to offer you today, a great attendee discount. We're going to offer you our roadmap for any market, the PET-D, because it really is a roadmap. This is our proprietary color bar algorithm you can apply to any market, any time frame. We're going to also included with the PET-D 2 continuation trading techniques. These are 2 techniques also included. I shared with you just one today. We're going to give you 2 more. We're also going to give you 2 pullback trading techniques. Included with that, you'll get a trailing stop technique. I told you at the very beginning, there are dozens of ways in which to apply the PET-D. We're going to give you a number of them in the course. And you can use it to confirm your current strategy. Remember, if you have a strategy that you say, well, I like my strategy so far, it's just kind of okay. Well, this, I think, will really take your current strategy to the next level, okay? Now, we're also going to include a full year of our platform because everything you saw today was one click away on the platform by clicking on the PET-D. Till this Friday, you'll get a full year, 12 months, absolutely free. So if you sign up until this Friday, in the next 2 or 3 days, you'll get a full year of the platform absolutely free. Now, this just doesn't mean you get the PET-D. You're going to get a host of other tools and techniques that I've accumulated in my nearly 50 years of trading that you won't find anywhere else, because most of the things you'll have on the platform are things I've taken from my years on the trading floor. Things like our enhanced buy-sell line to tell you the overall trend in just a matter of seconds. A strength of trend tool, a tool I developed with proprietary strategies that tells you whether there's more strength in the trend or if it's running out of gas. You'll get our scanner. You can scan for these PET D setups on a nightly basis, or scan for stocks that are either in the green PET D zone or the red zone. Entry levels, stop placements, auto-generated exit levels, personalized tech support. This is just a few of the things you'll get. We can't list all of them that you'll get for free for a full year on our platform. But I know a lot of you are still not convinced because you're saying, well, Steve, I kind of understand what this technique is based off of. Usually I'm getting in too quickly, or I'm determining what the market's going to do before it really has done that. So I kind of understand the concept. Well, if you think you don't need the PET D, let me share with you a couple of examples. Let's look at this example in VRSN, okay? This just happened last month. Okay, we're in a downtrend here, and then this happens. We have a nice update. Now, most traders, yourself included, would normally say, hey, the downtrend's over, it's time to go long, right? Looks like we broke out to the upside. But after seeing what you saw today, remember you're saying, well, maybe the translator isn't saying that. Steve showed a lot of examples where traditionally it looked like one thing, but it really wasn't. So you say to yourself, okay, I get this. What do I need to buy the PET D for? Because this is just bar number one right here. And bar number two just closed above the higher bar number one. So I'm going to be a seller. It's that simple. Why spend the money and take this course? All right, so you sell. And what happened? Okay. And you say to yourself, hey, this stuff doesn't work. I'm glad I didn't buy that course. Well, no, you actually should have bought the course, because if you applied the PET D and you had a full year of the platform, with just one click, you would have seen that in order to go short, both these bars need to be colored red. Remember, you need bar number 1 and bar number 2 to be colored red. But what was the color of bar number 2? It was green. So you never would have taken that setup and you never would have lost money. Or here's another setup, if you still think you don't need the PET D. We're in an uptrend here, and then all of a sudden you have a down bar. Now, most traditional traders would say, hey, Steve, it looks like we're going lower. But you say to yourself, well, I saw that PET D presentation. This is probably bar 2 in the formation. So I don't need the PET D. I can figure it out for myself. Here's bar number 1. Bar number 2 closes below the bar number 1. So I'm going to be a buyer. So you jump in, and look what happens. The next day it goes way lower. You say, wow, okay, well, I'm going to hold on because now it's really oversold. So I'm going to just maybe buy some more and I'll make my money back. And for the next 3 days or so, it just kind of, treads water. It doesn't really go that much higher, but it's at least stopped. So you say to yourself, okay, I'll remain long. And then look what happens after that. So see, this is why you need the PET D, because if you applied it on our platform, you'd have seen that this was not a proper setup. Bar number 1 was green, but bar number 2 was red. Therefore, this would not have worked and been a proper setup. Do you now see why you really need the PET D? This is a technique that really works, but you need the PET D in order to apply it to any market or time frame. Okay, so let's break it down. Our roadmap for any market special for all the attendees today. Here's what we're going to do. Now, the PET D course, just the course itself, runs close to $5,000. That's how jam-packed of information and how it can really help you. Now, if we include a full year of the platform, we've increased the cost to close to $6,200. Well, guess what? We're not going to charge you that at all today. We're going to slash that altogether. In fact, we're only going to charge you a grand total of $39.95. You're going to save over $2,100, nearly $2,200. So you can either have a one-time fee of $39.95, or we realize that's still a little bit too expensive for some people, so you can establish a payment plan. But for a limited time, you can pay with just a fraction of that $39.95, and you can establish a payment plan, monthly payment plan, and you can be still up and running as early as today. All right, so either way you decide to go, paying with a really deep discount of nearly $2,200 at $39.95 in full, or establishing a payment plan for a fraction of that $39.95, you're still going to get a full year of the platform absolutely free. So with one click, you'll be able to see the color bars appear on your charts. Okay, this is a great, great offer. Here's how to take advantage of this. Contact my sister site, Pro Trader Strategies. I would give them a call at 310-598-66 77. They have trading consultants manning the phones right now. They'd be more than happy to either answer any question you may have or take your order over the phone. Now, that link you see at the very bottom is the link that will take you to the info page. You can sign up there if you'd like. It's not a live link, but they've just posted a live link in the chat box. So if you click on that little chat icon there in your Zoom box there, you'll see that there's a live link, and you can click that on and we'll give you more information. Now we have a few minutes left for questions and answers. If you have any questions now concerning the PET-D, now's the time to ask me. Simply go to the question and answer box or the chat box, and I'll be happy to answer them as well. I noticed that you applied the PET-D technique to, here's one of the questions. You applied the PET-D technique to stocks and to currency pairs and to different time frames. Does this also work on other markets? Yes, I just, I didn't have enough time to get each and every market. And I know most of our clientele are stock traders, but I mainly use it on the E-mini futures because that's the market I like to trade. I use it on intraday time frame as well. It doesn't matter. You'll see this over and over again, this pattern being generated over and over again, but you must have the PET-D in order to execute it correctly, okay? It can work just as well in commodities. A lot of our students apply this with commodities. You can also apply this to crypto. It makes no difference, okay? So yes, it can be applied to other markets as well, okay? What exactly do you mean by educational correspondence? Okay, this is the most common question I get every week. Educational correspondence means that you saw there, if I go back to the pricing, just to show you right here, educational correspondence, all right? What that simply means is that if you're having trouble with anything, with the PET-D, with the platform, anything, you have my personal email address where you can contact me whenever you'd like. This is not something that I give out to everyone. It's only to my students. So it doesn't matter if you've been trading for 2 weeks or 20 years, everyone gets my personal email address. You can always contact me. I'll answer you during the market hours, during the weekend. It makes no difference. Before the market. So if you don't seem to understand something, or if you just want me to check your work, you can submit some charts and I'll go over them with you. And so there's lots of great ways to really learn exactly what we're talking about. So don't feel ever as if you're doing this alone the way some other companies do. We don't just throw you to the markets and say, good luck. I'm there with you every step of the way, okay? So you get my personal email address. Doesn't go to anyone else, doesn't go to an assistant or an intern or a salesperson. It comes directly to me. So no one else will see your questions, okay? Any other questions while I have there? Now remember, the PET-D is a tool I was introduced to almost 5 decades ago. I continue to use it to this day. That's how powerful it is. I use it in my personal trading. It really helps. It's a great tool. There are literally dozens of ways to apply it. You learn a lot of these ways in the course. So come on board. Take advantage of this. Remember, you can either pay in full for that deep, deep discount of $39.95, a one-time payment, or establish a payment plan. For a fraction of that $39.95, you can still be up and running with a payment plan, a monthly plan, and you can be up and running as early as today, okay? Take advantage of this. Contact Pro Trader Strategies at 310-598-6677. Now, as we conclude, I just want to say thank you as we take one last look at our disclaimer. Thank you for joining us today. As you can see, we are really, really focused on trying to educate you. Each and every week, we give you a different way in which to elevate your trading. But the PET-D is something that I use on a daily basis, and I really feel will help your trading. Okay, so thank you so much for attending today. We wish you all the best of luck, and I look forward to all of you becoming students of mine in the PET-D course. Thank you so much. Have a great day, and I'll see you next time. Bye-bye.